Hey guys, just writing this down. I might be actually just kind of talking here. I got a new microphone set up. As you guys see, we have a bunch of videos coming out with me and Mayhem. We will be talking about central banking, inflation. The inflation one's probably a 3 hour series. It will be broken down into 10, 20 minute parts. And then the central banking, we have no idea how far that's going to go. I literally have 300 years worth of data. If you know me, you know, I'm a real big history buff. It's part of the reason why, I like to teach people about history. I think it has so much to do with trading. If you can understand history, you understand trading, and vice versa. It's all the same thing. For example, I don't only want to know what happened during those times, I want to know what happened to the market. And so, if we can kind of talk about those things and just understand history, we can kind of understand how we should be positioned for a cycle. That doesn't mean we're going to be positioned perfectly every single time, but that does mean over a long period of time, if we're looking at an inflationary cycle, we have a strategy and an idea of how we should handle our finances. And really, here, what I'm trying to do is teach people how to be self sufficient and successful. I'm not just trying to teach you how to trade like me or show you what I do or be like, man, I'm cool. I have a fun. Look how sweet I trade. Like that's not my point at all. My point is to teach people how to trade. I've seen the reason why I started any of these pages in the first place is because I saw so many people kind of doing the same thing over and over again, where they would come up with these big audacious ideas and tell everybody how amazing what they're doing is and so on. And really, I think trading is a thing where you have to really understand yourself, your strategy, how you're going to trade, and how you're going to make money. And then finally, it's how are you going to um, what are you going to do to protect your finances over time? How do you protect yourself against inflation? How do you protect yourself against central banking? How do you protect yourself against market volatility, bear markets, and so on? So I like to talk about all of these things. So I think this series will be a culmination of me doing that all these years and kind of someplace to put that all together. So I hope you guys get to check that out. Here I wanted to just kind of talk about risk management. Risk management isn't the hardest thing to understand, but is the thing that nobody does, right? That's the biggest thing about it. I could write this stuff down. People will probably take a look at it, not really pay too much attention to it. But really, if you can sit there and pay a lot of attention to it and understand it, you will understand something that most traders don't. And this is why I think most traders fail. It's not about that they're stupid. It's not that they take big trades. It's not about anything like that. It is mainly about that they don't have a good risk management system. And I say system because I'm not just saying like, yeah, you run stop losses. Everybody runs stop losses. What if you run them too close? Well, you get the death by 1,000 cuts. So you have this small loss, small loss, small loss over and over again until you go to zero. What if you run them really wide with huge positions? Well, you're going to take big losses to zero. What if you run them really wide and they're only 1% of your portfolio? And then you can be wrong 4 times in a row and be right on the fifth trade. And, let's say that your average winner makes 5% of your portfolio and you're actually up 1% because of one trade. Now that's the way you want to set up your portfolio. This is how you make money in trading. You don't make money in trading by just going, I have these good ideas. Yeah, everybody's going to be wrong at times. It's not that you're wrong. Like, for example, I can say right now that I think that the NASDAQ will probably end the year up at a high, higher than it's been this year. I could say that that's possible. I don't know if that's possible. I'm just saying that. And I could be right. But how did you handle the chop during this period of time? Are you a long-term trader? Is it just part of the trend for you? Or did you have to get out and trade in and out of those trades because you're a swing trader? How exactly did you do it? So that's the difference between trading well and not trading well. So really, it's your systematic approach. How do you systematize your entries and your exits so you're not just going, I think this, I think that? Because really, a hunch means nothing in trading. A hunch means if somebody tells me they have a hunch, somebody's telling me that they're going to lose money. We all have those feelings. I'm not saying yet that you're stupid for it. I have those. You have those. We all do. But if we at least have a systematized way to enter and exit trades, now we're also letting the market confirm for us that these things are going to happen. So we're not just looking at it and going, oh, this should happen. We're letting the market confirm. And as the market confirms these things, we can put on these trades. And as we put on these trades with the market confirming, now we have a profitable system. And all these things are so important because one, you have to understand that you can be wrong. You have to embrace that. You have to love your losers. You have to be okay with losing money in trading because there's nobody who makes money every day. And if nobody makes money every day, then how do they deal with that? One, it's just as simple as if I'm losing 1% a month for, let's say, 11 months of the year, and on my 12th month, I make 12%. Now I've wiped out all of those losses. 10% is easy to get your money back, right? But if we're talking 50%, if you wipe away 50% of your portfolio, you have to gain 100% to get back to even. Now think about that. That's a huge return for the year. You have to make 100% to get back to that point for the year. So once again, all these people who talk about, this big trade, and you hear these big numbers when you read trading books, billions of dollars or millions and millions and so on. For all you know, they risked 1% of their portfolio on all of those trades, and 99% of the time, that's the truth. They might take 4 shots at a trade. What's his name? Paul Tudor. Paul Tudor Jones always talks about it. He said right in Market Wizards that it isn't, it doesn't sound sexy to say Paul Tudor Jones on his 5th attempt caught the top of the market. But it sounds really cool to say Paul Tudor Jones caught the top of the market. And the truth really is it took him 5 trades to get there. And I think a lot of the time, I talk about this a lot of the time where a lot of my best trades happen when I've taken shots at it. Not just one. I didn't just put it on and go, this is going to be a great trade, and then it just goes up. Most of the time, those trades take a few times, at least a few tries to make it right. So if that's the case, then we have to be able to handle our winners, love our winners, and keep our mental capital. Over everything, the mental capital is more important for a trade than anything else. If you can keep that mental capital and have yourself at a very even plane as you're trading, so you're just kind of coming in here and you're doing well, and you just understand that you're just going to execute your trading strategy and your system and your risk management models and everything. You're going to do this over and over again. I can guarantee that you will make money over time, as long as they're within the parameters I've laid out here. If they're in the parameters of the 1% rule, 2% even, you don't want to go much over that, even if you're a small account, but keeping it around that 2-3% at absolute most is incredibly important. I think 1% is perfect. I don't think anybody even needs to go over that. Some people even go under that. If you're utilizing your stop losses, or if you're a take profit trader, I'm not a take profit trader, but I do utilize stop losses. If you're understanding that, where are your points where you're going to get in and out of trades? Why do you enter a trade? Why do you exit a trade? How do you look at that technically? Yes, you can have fundamentals around it, but you still need the technicals to verify. So if they're going to verify, when do you put on that trade? And then when do you get out of that trade? And know those things before you ever put the trade on. Something that people don't know, something that people don't talk about enough, is that you have to understand those things before you put the trade on. Because when you're in the trade, your brain's going to say, I need the money from that trade. I need this. Oh man, that's a lot of returns. I should just get out right now. or it's a lot of pain. I don't want to be in it anymore. So you have to understand why you're getting in and out beforehand, before your brain starts to make up the why for you. And then finally, at the end, I talked about adjusting your indicators for volatility, possible fundamental events. I don't do that for fundamental events, but if you're a stock trader, you do have to understand those, because you have to understand the earnings releases. You also have to understand the volatility of each trade. So, for example, if Bitcoin is the most volatile product in history, so my position size has to be really small. And then if we have something like the US dollar, that's a very low volatility product. So, or bonds, that's a low volatility product. So I can have a bigger position in those. And my stop, for example, if it's 10% on a bond and 30% on Bitcoin, and both of these have to equal 1% of my account, then you have to set it up that way. So, all right, everybody, if anybody has any questions, feel free to leave a comment. I'm going to turn this into a series, so I'm going to do a little bit more on this, because I think this is something that a lot of people continue to ask about, and I will continue to post about. All right, guys, have a good one.